Hey there, welcome to the Truvix Podcast, where it's all about AI that works like you do. We talk with movers and shakers in property management about what's changing, what owners really care about, and how to make your workday smoother. Just honest, inspiring conversations to help you stay ahead and keep growing. Now, on today's podcast episode of the Truvix Podcast, me, James Giarriputo, the powerhouse vision behind Vision Development Group. Now, James has spent 30 years in real estate finance and today runs three successful companies, Canyon Mortgage, Yes Lending, and Vision Development Group. With their portfolio of over 40 multi-unit doors across Pennsylvania and Florida, James has seen firsthand how smart investment and disciplined property management can change the game. All right, welcome, James.
Thank
How
you.
you doing today?
Thank you, Mr. Marcus. I appreciate you having me. I really do.
Did I get that intro right?
I think so. I think it was great. I really do. You did a great job.
Okay. All right, James. Now tell me a little bit more about what you do um, and what drives you into the property management space.
All right. So I started in real estate finance, like as you mentioned, 30 years back, a residential mortgage broker. And it evolved over time into commercial loans, private money or hard money, as people like to say. It was basically anything real estate related financing. And I would say about 3 to 4 years ago, I've owned property through the years, but never really focused on it. About 3 to 4 years ago, I have to be honest with you, I was a little burnt out. And I went in the direction, myself and one of my employees, Michael, we started to focus on going after long-term deals, not necessarily flips, not the financing, but long-term ownership. And I opened up a company called Vision Development Group, and I started buying property. And I got to tell you, I absolutely love it. It almost revitalized me. It really did. And I think it's kind of like you could tell people what to do, but to do it yourself, it might take a little bit longer, even though you know what to do. And it took me a minute to get here at 54 years old. But I've acquired, like you had mentioned, 40 plus doors now, mostly in Pennsylvania, some in Florida. My office is in Long Island, New York, but I don't buy investment properties in New York for various reasons.
Mm-hmm.
But I absolutely love ownership for some of the benefits that are involved and come with it. And I think that real estate is never going anywhere. And as I say to people all the time, everyone needs a place to sleep. And the goal for me is I want to provide it. That's the goal. Vision Development Group has been real good to me. It's been a lot of fun, and I love what it's about. The acquisitions and long-term holds have so many different benefits that the average person really doesn't understand the true benefits of it. And we're just going to keep going. That's my game plan. That's my game.
And I know you mentioned like a lot of people don't know about the benefits. So what are some of the benefits
For
for
me,
long term?
for me, it's the tax benefits as far as depreciation, bonus depreciation, and things of that nature. The appreciation of value, you have no choice, but real estate just goes up. You have no choice. You have dips in the market. Rates might go up. Things might slow down overall and whatever. But at the end of the day, real estate always goes up. Passive income. Those are the three big benefits of owning real estate. And it's actually more along the lines of building wealth than getting rich. It's really a lane, as I call it, of working or income and wealth that I think it's one of the best investments you could possibly do.
Yeah, I definitely agree with that. Now, why did you focus on? I know we talked, and you said you focus on multi units and avoid single family rentals, correct?
Yeah,
Okay.
it's a good question, and I share my take on it with people from time to time who ask me, because I tend to get into a lot of conversations about it. And my take is, you could buy one property and diversify within that one property. If you buy one property, one door, one family home, one unit, and you have an issue and someone doesn't pay, that entire property is a negative cash flow. If you buy a 6-family, a 7-family, whatever it is, you've got multiple doors in there, which spreads out your risk, so to speak. And that property typically throws off a lot more income than a single family home. Now, your acquisition cost might be a little bit more money than a single family home, depending on where you're buying and things of that nature.
Mhm.
But for me, I'm always going to go after 5+ units. That's just my model. And I think it makes sense for what we're doing as far as owning, because there's a number of doors, a goal that I have, which is about 150 doors. And I think it makes sense for me rather than single family home.
Okay, and then do you manage for other owners also?
No, I don't.
Oh,
I'm toying around with the idea of it, but there's only so much time in a day. And being in real estate financing, we do residential mortgages along with we have another company, Yes Lending, that does the private mortgages or hard money and commercial mortgages. And then we've got Vision Development Group. So we're pretty busy. We're pretty busy. We're doing okay. I didn't get there yet, but I may toy around with that in the future. Who knows?
who knows? Okay. All right. So let me ask you another question. Now, I know there are some challenges dealing with managing your properties. Now, as far as tenant expectations, now are small operators struggling to keep up with today's tenant demands?
I mean, I wouldn't say we're struggling. I mean, to me, it's a revolving door like tenants. They're going to come, they're going to go. They're going to come, they're going to go. So whenever we have a vacancy, we fill them. That's it. We do our best. We use certain sites and certain ways to keep tenants in the doors and keep the income flowing. So I don't think we're struggling. No, I wouldn't say that.
Okay, good, good. Because that's, sometimes that can happen with the revolving doors. Tenants are always, the expectations are high, which is understandable
Yeah.
and
Yeah.
everything. But as long as you're, treating them right and everything there.
And that's the key. And that's the key.
Yeah.
You never know who you're going to get until they're actually living there. You do your best to verify your income, credit, rental history, and everything above. But at the end of the day, you're not going to know until they actually move in and you see how it goes. And you're going to listen, the more doors you have, you're going to have issues. That's part of the program here. It just you can't avoid it. You can try your best to mitigate the risk by trying your best to get the best tenant. But it's going to happen from time to time, depending on the type of area you're buying in also. Is it an A, B, or C grade type of area? I find that most of the cost right now is spent more on, again, depending on the type of property that you're buying, it's all learning experiences. If you're buying in a C grade area, you spend money on upgrading these properties or getting them to a point of stabilization. You're going to get a deal on a better priced unit, but you might want to be careful with that because you get what you pay for. You might get a great price on something that needs a ton of work. Now, the cost of material and labor today, it might be worth it to buy something a little bit more expensive that doesn't need a lot of work. So you have to weigh things out before you go in. That's all.
Okay. Now, what are some of the other challenges that you might face managing your properties?
I think it's just you have to be ready for the situations with tenants, especially when you're buying multiple doors in one place, an apartment building. That there's a lot of personalities you have to manage along with the building. And from time to time, you might come across situations of tenants banging heads or something along those lines. That's something, you have to be good at mitigating. And I don't know if I'm good at it, but as the days go, you learn to deal with it. And then, the challenges are people and repairs because the cost of renovations has gone up over the last 2 years because of material and labor. So you got to be careful what you're buying and just the people in general. That's it. But you know what? You know what they say? If it was easy, everyone would be doing it.
That's definitely true.
You right?
That's one of the truest statements
I still think
around.
it's one of the greatest ways to focus your energy on as far as income and wealth. I really do. Real estate is great. I'm in love with it. I really am.
And as far as technology, are you using any technology to keep up with the tenants or finding properties that'll be a good buy for you?
We do from time to time. It's a little different. And it depends on the area that you're going because some of these areas are a little bit behind the times. Like there's a couple of areas in PA that we look at. Everything is not public record like it is in New York and the boroughs and things like that. It's still there behind the times. But we do use sites like Door Loop and things like that for tenant payment. For, if there's an issue with an apartment, the tenant could put a request in the portal.
Mm-hmm.
We could get our guys over there to handle it. So we do use certain sites because to do it manually, when you start to accumulate doors, would be real cumbersome, and then that would take up too much time. And it enables us to keep organized as far as leases, when they're expiring, who's in what, P&Ls at the end of the year for accounting purposes and things of that nature. That's real helpful. We do skip trace a lot of stuff to find new acquisitions. So yeah, we use some technology. And it's helpful. It really is.
Do the tenants, as far as is maintenance a hidden cost within property management?
It is, and you can just finish renovating an apartment and rent it out to someone. And I want to be careful with the word renovate, not necessarily a gut renovation unless it needs it, but just
Mhm.
put some money into the apartment, make it look real nice, and of course safe. And you can rent it out to a tenant, and after a year, they might leave and go somewhere else, or whatever the case may be. And you go and look at this apartment to inspect it, and you got to do it again. You got to clean it up again. So that's always something you need to think about. So it's important in your monthly expenses to keep a cushion available for renovations. And maybe you give it like your first acquisition, 90 days, 6 months to see how things kind of go. And of course, there's always those surprises, the hot water heater broke, the roof is leaking, things you don't really intend on happening. They're going to happen. They're going to, a lot of people, it's funny, Marcus, a lot of people think like, all right, this property is going to throw off whatever, 2,000 a month, 1,500 a month, 3,000 a month, whatever the number is. It's going to go in my pocket. I could use it as income. It doesn't work like that. It doesn't. It would be nice if it was, pen to paper, exactly what you write down is what it is. It doesn't work like that. If people are going to buy a property to make monthly income on, sometimes that's difficult. You really got to accumulate a lot of doors to really be able to live off that revenue coming in every month and consider it your monthly income alone. I think it's a lane. Yeah. I think it's a great lane. And I think over time, after things get stabilized, it can be that, but you need a lot of properties to really do that. Unless you're buying cash on each property and there's no mortgages and, there's a lot less debt to be paid, but I don't know who's got the money every single month to buy cash, or not every month, but every time they buy a property to buy cash, do that, So be careful in what your game plan is, because there's always those surprises. You can't get away from it.
No, you can't. I
No,
mean, because
you can't.
things do happen, and owning property long term, it's a long term game plan. Yeah,
Absolutely.
yeah, it's not a
Absolutely.
month to month. Now, what do you think about the AI and the industry shifts within the property management?
I think it's incredible, and we're interviewing a number of companies now to help us. It's not something we've ever used yet or committed to anyone. We are dabbling a little bit, but I think it's the way of the world and where we're going. And I think it can be very helpful rather than calling us or something along those lines, or even put a complaint in the portal or something along those lines. It could probably be a little bit more efficient in not only communication, but keeping track of everything. So I think it's got a lot of benefits, but I'm not there yet as far as picking my go-to and really putting it into action. You haven't decided yet. There's a lot of companies out there who offer it. It's finding the right one that fits
Yeah.
your modeling. Some people have 5 doors, some people have 50 doors, and some people have 500 doors. It's a matter of what you really need in the moment.
Okay. So yeah. So you see I mean, it's AI is here to stay. It's not going
I don't
anywhere.
think it's going anywhere.
But
I think it's only going to improve.
yeah.
And go and we're going to adapt to it because we should.
And I know you hadn't adapted the AI. So have you thought about a automation tool or tools that every property manager should try right now?
Well, like I mentioned, we are interviewing a number of different companies. We're definitely going to be using one. We're definitely. I've got 3 on my radar right now that we're going back and forth with. It's kind of like I said, with a tenant. You can have the greatest tenant on paper, great credit, great. You don't know until you're actually using it if it's a good fit or not.
Yeah.
So we're in the process. Over the last couple of weeks, we've got meetings and calls set up, and we've had a few, and it's interesting stuff. It's kind of incredible, to be honest with you. It's kind of incredible. It really, really is. And I think it's going to be a necessity, and we're going to do it.
Yeah, definitely a necessity, and just need to fit exactly what areas that you're struggling that can improve with. It has to be something that improve your business, improve efficiency, improving whatever you want to improve as a company. Because you can't use it all right now.
You know, it really does. You can do anything you want, basically. But again, it depends. Everybody has a different model. Everybody has a different size company. Everybody has different needs. And I know where I'd like to improve, and we're looking for that basic fit at the moment.
Now let's as far as financing and investments. I know your background is lending.
Yeah.
and then you move to the buying properties and managing your properties. What's the number one financial mistake you see small managers make?
I think the number one mistake, it's not that I see them make, it's the thought process. It could be someone coming to me and wanting financing on their first investment property, a small two-family in Brooklyn, or whatever it is, or a guy talking about owning a six-family, or whatever it is. They think that they're going to net what the property nets every month. And that is the biggest misconception. I think real estate is also misunderstood in a sense where people want to own it for passive income. And again, you can get there. You really can. In every situation where you're buying, the cost of it, the condition of it, every situation is different.
Hmm.
But the thought to me should be recalculated in the sense where I buy real estate not for monthly income, but for the things we spoke about: depreciation to help with income tax, appreciation, because in 2 years, I was able to pull out a chunk of money from one of my properties and buy two more. So it's a vehicle to keep going and just building wealth. And another mistake I feel like people make, they don't fully understand the areas and what comes along with it. Like for me, I'll give you an example. I first started buying in Pennsylvania. Now, why did I do that? So for me, the acquisition cost was a lot lower than my backyard, which is Long Island and Queens and Brooklyn, a lot lower. I can buy 3 buildings there for the cost of 1 year. So I'm spreading my risk out. Number 2, the real estate taxes per year are a lot lower. And number 3, it's a landlord-friendly state. So if I do have an issue with a tenant, which nobody likes, but it does happen, it happens, that the eviction process is a lot quicker. I couldn't even, we're talking 45 to 60 days versus in New York, it could be up to 2 years.
Oh, wow.
Not necessarily 2 years, but if
Yeah,
if
it's
you
a
get a
long time.
situation, it
Yeah.
can really, really drag out. And that's why I focused on the area. We sat back and we grabbed some data, and those were my key, the key information that helped me make my decision on where to start. And from there, it just spiraled, and it's been great. It's been great.
So what made you go to Florida from New Hampshire?
Well, New York, we started at PA, and then I went
Yeah,
and I went to
Pennsylvania.
Florida because same reasoning, same reasoning. I mean, Florida, to me, one of the personal reasons was we can use a couple of places or two for our own me and my family, for our own personal benefit, go on vacation. And number 2, it's a landlord-friendly state. That is it. That is it. You want that on your side. And a lot of people don't understand that. They just want to own. I want to own. That's all they think about. They think about, I want passive income. They do have an inkling that owning real estate can be beneficial in a lot of ways, but they don't fully understand how it's beneficial. And you have to be careful in where you plant your seed. You really do. And again, that's my model, and that's my opinion.
Okay. And are you thinking about going to any other states besides those two?
I get a lot of offers. I have some relationships in Ohio. I have some relationships in Detroit. I have family in Texas that they want to start looking. But like I mentioned earlier, thank God we're busy. So right now, I think we're okay. And we always get new opportunities where we already are. And we've got our crew and our system down. So I'm okay for the moment. We'll see what happens. But right now, no.
Yeah. And how big is your company?
We're talking about Vision Development Crew.
Yeah, let's talk about vision
So
development.
I've got a 5-person crew in Pennsylvania full time that handles a lot of the properties. And also, we also buy and sell real estate there too. So we have a few properties on the market at the moment that we're selling. I know those are single family homes that we buy, renovate, and sell.
Okay, so that's a
So I've
part
got
of your
that lane of the company also that we also focus on, along with the long-term hold. So we've got 5 there, and I've got 3 here in the office. So it's not it's a boutique company, but again, that's the way I like it. I really, really do. And I think with today's technology and the way we do communicate, and it's only going to get better, and the systems we put into place, I don't think you need to have a tremendous amount of people to be successful at all. Don't. Times have changed. Yeah, times have changed.
Yeah, not exactly. Yeah, you don't need that many, especially with like you said, the new technology that's coming out and
You
stuff
know, it
like that.
it's unbelievable.
Yeah,
Yeah.
it replaces people, which is a good thing. It could be a bad thing also. But so you mentioned that you do fix and flip or renovate,
Yeah.
rehab, or sell. Which one you like doing best?
I like the long-term aspect of things, to really do. It's really nice to see a property go from a condition where it's not so good as far as the fix and flip goes to where you finish it. I like that transition. I like design aspect and all that kind of, things that go along with it. But I think the buy and hold really, I don't even mind dealing with tenants from time to time when there's a problem. I really don't. I'm not exactly sure why, but I love it. I do. So if I could, if I can have 700 doors, I would love it. I don't know if my wife would love it, but I would love it.
Yeah, you might have to hire some more people at that
Well,
point.
yeah, yeah. And that's
You
okay.
definitely growing.
I'm up for it. I'm up for it.
Yeah, you definitely will be growing in that aspect. Yeah, so because there's a lot of people that's really competitive in the fix and flip, but they don't understand the long term. Why is that?
I think people focus more on today than tomorrow, so to speak. I think they focus on, in their mind, quick money. I do sit with some people from time to time, or just talk to them wherever it is over the phone or whatever, and they'd say, "Hey, look, I want to flip this so I could buy that and hold on to it," which is fine. They're trying to gain capital to do, to buy something better or long term. I think people are in it for the quick hit, more than really what a buy and hold situation is all about. I think it's lack of knowledge also. I think it's the lack of understanding. I really, really do. That's my take on it. I sit with a lot of people, and when you dive into things and talk about it, their mentality is very different. It's very different. And I'm doing this 30 years, so I have a leg up. I have a leg up. But when you sit with them, it's just about, well, yeah, I can make $1,000 a month off this. Well, I wouldn't look at it that way. I don't care if you break even every month. If it's in an area where it makes sense and the laws as far as evictions are on your side, and the potential for appreciation and tax benefits are there, still might be a great deal, even though you're not making a lot of income every month off the bat. Stabilization comes into play, tenants leave, you raise rents with the market, things change. Mortgages get paid down and they're getting paid back by tenants, not you. There's a lot of things people don't think about that it'd be great if they would look at things differently.
What do you think about? I mean, I know it's a mentality thing as far as fix and flip versus long term. Do you think it's a lot of they listening to a lot of people regarding the fix and flip? Is that a lot of noise out there on that?
So it's kind of faddish to me. Like people, yes, the answer is yes. My cousin flips a lot of properties, whatever. He buys foreclosure. I want to buy a foreclosure. Buying a foreclosure is probably one of the hardest things to do, or a short sale. Those are cash deals typically. You're buying with problems. That's why you're getting a deal on the property. It's either, it might be a tenant that you have to evict, there are violations on the property. Condition that sometimes it's sight unseen. You can't go inside and look at the property. It depends. It depends. It's not always a great deal for a first timer. It's not. I've heard a lot of horror stories for people that are not familiar or fluent with the process, and they don't have the revenue or the cushion to back them up in case there is a problem. They put their budgets together, and it's right to the penny that if something happens, they're in trouble. And that's not the right way to do it. They think it's a great idea, but they've never felt it. They've never done it to really know if it fits them. So they got to be careful with that. It is what it is.
Now, James, if you could give one piece of advice to a property management with under 100 doors, what would it be?
There's no wrong time to buy. That's number one. There's no wrong time to buy. A lot of people, to me, like in regular mortgages, buying a property, an investment property, no matter what it is, they get a little nervous because interest rates are high. Things of that nature. Buy. Real estate's long term. You can always refi. When rates come down, what happens? Everybody runs to buy. Prices go up. I'd rather see you refinance and get a lower rate later on. Maybe you pay a little bit more closing cost than pay another 50, 100,000 in a price. You can always change your rate. You can't change the price you paid. You can't. That to me, property management in itself, everyone's got their own style. For me, I try my best to be a great landlord going in. Does it always work? No, it doesn't, because everybody's different. But a great landlord going in. Respect people, and there's never a bad time to buy. That's it.
That's actually excellent advice as far as yeah, definitely very true. Rates go down, prices go up. Buy now, you can always refinance.
Absolutely.
Yeah. when the
Absolutely.
rates do come down. So you do have the same price. That's great advice to people who's looking or on the fence and
And there's a
hesitant
lot of
because
them.
of the
There's
rates.
a lot of them.
Yeah, who's on the fence because of the rates. Yeah, when rates go down, you're gonna have more competition because of the rates and the prices go up. Supply and demand. Yeah, supply and demand at numbers 101.
That's right.
But so where can they find you? People, how can they get in touch with you?
All right. So if you don't mind, I'd like to first give you my email address, and it's James at visiondevgroup.com. James at visiondevgroup.com. Or if it's okay with you, I love giving out my direct line because I love business. So I'll talk to anybody. It could be Saturday, it could be Sunday. It doesn't matter to me. My number is 516-610-8171. They can call me anytime just to even chat. We don't have to do business. Or they can email me with any questions, any concerns, anything at all. I'm always here.
Last question. Where do you see yourself in the next 6 to 12 months? What is your vision?
Another 20 doors in 12 months. That's where I see myself, and just to keep going. I really want to solidify also my game plan is over the next 6 to 12 months, like give you that number, to expand possibly the management portion of the company to other clients. I am toying around with that, like I mentioned. But other than that, just to keep growing. That's it. Because I love it. I do.
All right. Well, I see you loving. That's a great, glad you shared what you want to do in the next 6 to 12 months. Thank you, James, for hopping to the Truvix Podcast. If you like what you heard, hit the follow so you'll never miss a conversation. And tell someone in property management who could use these insights. Catch you on the next one.
I appreciate you, Marcus. Thanks for having me.
All right. Thank you, James.